that brings us to the restatement of some major tax provisions. One of the things is that since the election back on, what was it, November 2nd or November 4th, we've been waiting to see what's going to happen in terms of any tax items that were popular before, whether those would come back. And what we found is that so far, as of today, nothing. The taxes remain the same. Nothing has changed. In fact, things that we were hoping would be extended are still out there, sitting on the vine, and we wonder, are they going to take hold yet before December 31st? Well, one of the things is that according to Kiplinger's, and Kiplinger's has a pretty good beat on what goes on in Washington, what they are saying is that 2014's tax rules have still not yet been finalized. So you need to know that. Even though today is, what, December 9th, and the government has 22 days yet, they still have not finalized 2014's tax rules. And what that means for us is a few things. One, it means that our filing season, because the IRS is going to have to get up to speed with forms and whatnot, is probably going to be delayed, as it has been for the past few years. But there are some extenders that we're hoping will be extended that are not right now part of 2014's tax rules. And one is the state sales tax that's in lieu of the state income tax. So if you bought a car in 2014, we're hoping, and according to Kiplinger, they're saying a pretty good chance that will be extended. The other one is if you're a school teacher and you spend $250 in the classroom for classroom supplies, that one would hopefully get extended. This next one is probably the biggest one, because this next one was such a good deal for so many people, and that is the direct payouts of $100,000 or less from IRAs to a charity for people who are 70 and a half and older. And this was extremely attractive because what would happen is, think about it before. If you took money out of your IRA and you donated that money to a charity, that had the potential to really throw off a lot of your other deductions. Because what it would do is it would raise your adjusted gross income, and yes, you would be able to take a deduction for your charity, but by raising your adjusted gross income, it would cause your Social Security to be taxed. It would cause perhaps your medical expenses that all of a sudden you couldn't take as much of those. It really played havoc with a lot of other calculations that go into a tax form. And so what the government allowed for the past few years, but has not yet extended yet for this year, was to say, hey, that charitable deduction that you're making, go ahead, go straight from your IRA, go straight to your church, go straight to your charity of choice. It goes straight there, and we're not going to include that in your income. Now, you don't get a deduction per se either, but you do get a deduction because you're taking money out of your IRA, and you're not having to pay tax on it, and it's going straight to the charity. So,
Brian,
hopefully, and this is,
if I could just jump in on that, on the charitable IRA rollover, as it's known as, it is my understanding it has passed the House, looking to go to the Senate, and then signed by the President. They think it's going to be done this year, and I also heard something. It's not an extension, whether they're trying to make that provision permanent, so we don't every year have to have this webinar and talk about the possible extension of this.
Well, what will I do then on December, Rob, if we don't have this webinar?
I don't know. We won't be bored. But a couple of things that we're telling clients, and several of them are on the web call right now, so hopefully this is a reminder, is that if they're going to give from their IRA, they're over 70 and a half, they're going to give from their IRA. We don't know if it's going to happen for 2014, although we're cautiously optimistic, is go ahead right now. It's December 9th. Write the checks directly from your IRA to a charitable organization, not a family foundation, not a donor-advised fund, but an end charitable organization now. And if history repeats itself like in 2012, they will honor those checks. But you want to make sure the check clears by December 31st. Now, if you remember in 2012, they allowed you to give up to January 31st the checks to clear of 2013 for required minimum distributions for 2012. So hopefully history repeats itself with a little extra grace from the IRS on this provision.
My guess is they would. My guess is that they would. They don't like to reinvent the wheel. So, but yeah, and hopefully this will. The other one, and this has been for business owners a big thing, but that is bonus depreciation, 50% bonus depreciation, and also perhaps, and what's not on here, but also increasing what's called Section 179 depreciation, which allows companies to write off equipment much faster than they normally could. And hopefully that will be extended, and again, hopefully it will be made permanent. So these are reinstatements that, again, Kiplinger's, and Rob's read some different things in different places. Sources are saying that most likely these are going to happen. Unfortunately, they just haven't happened yet. And unfortunately, it's just the way our government works. Here it is, December 9th, and they haven't figured this stuff out yet. So it is what it is. So with that, I always like to use this one, this saying, and that is, using coercion to drive charity is like using kidnapping to create love. But I guess if that's what we can do to create charitable by donating straight from an IRA, that's a good thing. So with that, Rob, that's those are the items that I had. Do you have any other questions, or have any questions come in that we can address?
I've been asking as they've been coming in, but just to remind the people who came on the call later, if you would like to ask a question of Brian, you can email Lillian. She's the person who sent you the link for the GoToMeeting webinar, and she will forward that on to me, and I will ask the question of Brian. There's nothing in yet.
Okay.
So I tell you, the one nice thing for those of you, or those listeners, viewers in Texas, Tennessee, and Florida, is allowing to have that state sales tax deduction, because those are states, 3 of the states we have callers on or viewers on that do not have a state income tax, and that has a big impact on their income taxes.
That's right. In fact, that's why that came about, is because, if you recall, that came about when a certain president from Texas came into office and said, hey, this isn't fair, that other states can deduct their income tax, and yet the states without an income tax don't have anything that they can deduct, but yet they're typically paying higher sales taxes in those states. Unless, of course, you live in Illinois, where there you get to pay both higher income taxes and higher sales tax. You get the best of both worlds.
You get the best of both. That's true. That is true. It's amazing when we do workshops down here in Naples, Florida, and having many people coming from the tax states up north, and they're coming down here in groves, and it's no longer known as Heaven's Waiting Room, unless it's an extended plan there, because these people are in their 50s, early 60s, coming down here, and the tax savings is quite high, and so the northern states are losing revenue, and Florida is growing, as is Texas and Tennessee, are just several of the states that I know they're growing quite well. It doesn't appear there's many more questions here. I would like to make a couple other announcements here. If you are listening today and you'd like a copy of the slides, we can make them available. And this webinar is being recorded and will be placed on our website for other people to view. If you want to go back and listen to it again, you can. If you have questions, you can email us. Come up after this webinar. Feel free to do that. We'd love to help you. But really, the time to plan your taxes is not in April or March the year following. The time to plan your taxes is in October, November, the year before. Because once we hit December 31st, it's, as the old saying goes, water on the bridge.
Absolutely. I couldn't agree with you more, Rob. Well, thank you so much for this opportunity, Rob. And I would say, if folks have any questions or for me or anything that they want to, feel free to provide them my contact information. I'd be happy to help them out in any way.
Brian, we truly appreciate it. We did it last year, and you were very well received. And by the looks of the amount of attendees we have, it's they were anticipating this call, so we really appreciate your time and the effort you put forward in putting this presentation together. And for those of you listening today, look for 2015. We'll be doing future webinars, and we'll be posting that and sending out information on those webinars as we move into 2015. So have a wonderful rest of the day. This is Rob from Naples, Florida, and Wheaton Wealth Partners.